To get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Alright, we'll get started straight away this week. Let's have a look at what we have on our agenda. It is the first week of the month, so it's generally a very busy and jam-packed week. There's lots and lots of things happening. Last week, if anybody saw anything happening on a Japanese yen, you would have noticed the Japanese, look, the Bank of Japan's always one of those that seems to surprise the market consistently. I trade almost, one of my favorite trading pairs is the Euro Yen, and I've learned over the years to expect anything from them, even when we think nothing's going to happen. And what they did last week is certainly deliver something that was not expected from the marketplace. For those of you who are not aware, what they basically done is the Japanese bank has gone into negative interest rates. Now, what that means is people in Japan have to actually pay the bank's interest to put their money with them. Okay, so that's what that basically means. In essence, it's a method of weakening their currency, and we saw all Japanese yen pairs skyrocket against yen in that single action. The main thing to take from that, while I'm on topic, actually, the Japanese became the fourth major bank to go into negative interest rates, along with Denmark, Switzerland, and Sweden as well. But the main thing to take from the event that took place last week is also the concern that Japan is having with inflation and China, and it is not in its own little island, and it's not blocked out from other economic factors around the world. But the most important part is that in their speech and in the minutes that were read out, they also indicated that they are willing to take further action if what they've done is not going to give them the result that they need. And any other type of further actions that is available to them is to again go out and increase their quantitative easing program, which basically means print more money, which will add further weakness to the yen. Now, I don't know if that's going to happen in the next month, 2 months, but basically they have put it out there. And always, I guess, if you trade a Japanese yen pair, history has shown that they can be sporadic and a little bit unpredictable. So whenever there's something on the calendar with Japanese yen, especially when it's a monetary policy type statement, it's always one to look out for. All right, so that's what happened last week. What we have this week on our agenda, of course, from a local point of view, it's we have the RBA. Give me one moment. We have the RBA decision on interest rates. Nobody really thinks that they're going to decrease just yet. However, with the stunt pulled by Japan, and it's kind of setting the tone and the mood, what we're really concerned about is what they say in their statement, which could kind of forecast a decrease or a cut in rates in the not too far future. Now, Australia was one of those countries that was probably going to be cutting rates this year at some stage. Maybe what's happening around us could accelerate that. So key to this is not so much the number that we get over here, but rather the statement that accompanies the number, and that happens tomorrow. It's traditionally the first Tuesday of the month at 2:30 local time is the RBA statement. So that's on the very close front. We've already had China PMI numbers come out this morning, a couple of hours back. We also have the other major one is the GBP. Okay, so we have GBP. They give out their official bank rate numbers. Now, key with the pound on this one is the following. It's been widely expected that the Bank of England was going to start to follow suit with the Fed Reserve in the US and begin a cycle of increasing interest rates. In fact, if there's ever a currency that has every reason to lower their inflation, all right, it is GBP, okay, and it's a sign that rates may not start to rise, which is contrary to what everybody has been expecting. So the key with this particular announcement towards the end of the week on Thursday is basically the summary, okay, whether they start to echo what Japan has done, and what we're looking for is they may start to hint that in fact throughout 2016 there may not be an interest rate increase at all. What that will do is will basically give further weakness to the pound and resume most of the trends that the pound is already in, like for example against the US dollar, which is on a heavy downtrend. So we need to look out what this basically tells us. It could be a good indicator as to how long our T-chaser type trades can run on, and hopefully if we get a really good run, it's that type of trade that keeps on giving. All right, so look out for that one on Thursday. Other info that we have is, give me one moment, let me clean up my chart. Kiwi Dollar has got unemployment change numbers, all right, that are going to affect the market. And of course, the final, but the most important of the week, or the ones that might impact the week the most, is obviously non-farm pay numbers, which happens in the wee hours of Friday night for us, or rather early Saturday morning. The job number. Now, important thing to note with non-farm job numbers. If the number that we get will be a weak number, all right, a number that is not very strong, it will have a higher impact in the market as opposed to a strong number. So what I'm trying to say is if our number comes in at say 240 or something like that, which is stronger than expected, it will impact the market. However, if we get a negative number like a 170 or a 160, which is less than what we're expecting, that number will basically move the market more, predominantly because it will indicate that perhaps the Fed Reserve is starting to show concerns about what the other major banks are experiencing in terms of pressure, and it could act as an early indicator that the rate increase cycle that we all believe that we are in for 2016 with the US dollar may in fact all of a sudden not be as close as we think it is. All right, so this number is going to be quite interesting. So a weaker number should impact the market in a greater way than a strong number will impact the market. All right, the euro for this particular week is relatively quiet. There's not much on the euro front. I believe predominantly because of the nature, there's a couple of currency pairs that are going to move a lot. The Aussie US, the Kiwi US, and the Pound US are the three that are going to be impacted the most by data this week. Okay, if anyone has any questions on this, please type them in. Let me know as I go along. I'll come back to them and I'll try and address them for you. So everybody, please make sure that you've taken note of these times. These times are in my local time, which is Sydney time or Australian Eastern Daylight Savings Time. All right, let's bring up our charts. Let's see what's been happening and let's see what's possible for us this particular week. Let's kick off with the Aussie dollar. Okay, Aussie dollar, we have been tracking and we have been waiting for a pullback so that we can get an opportunity to sell into it. So we have actually come back, but there was our first fractal and we didn't really get an entry signal there. That is not an entry signal, so we had to let this one go by. We've since taken out that high and gone a little bit higher, and we're still looking for an entry signal again to go short. Now, a couple of interesting things that I found here. If I come down to a 4-hour chart, all of a sudden I can see that on a 4-hour chart I'm in a bit of a channel. Okay, does everybody agree that this channel looks legitimate? Does anybody strongly disagree with that? Can I just get a little bit of feedback? What do we think? Okay, most of you are saying that it's good. Fantastic. All right, so with that in mind, what's my bias on the Aussie dollar? So if I go to a daily chart, okay, what's my bias? What do you think my bias is on the Aussie dollar? Think of all the fundamentals, think of that chart. What would I really like to do? Okay, so we've got two people who've got it. Anybody else? My bias is, oh, it's 50-50 actually, guys. My bias is I actually want to be a seller. Okay, remember the reasons why. If I zoom out a little bit, that's my daily chart. Would we all agree that this line that I've got on my chart here acted pretty well as a support level? Do we agree that that line was a good support level line? Yes, we do. Great. So if this line is a support level, until I cross it back to the other side, I have no intention of becoming a buyer. Okay? Because remember, what tends to happen? A support line can often come back and act as a resistance line. So it wouldn't be surprising if, for example, let me extend it out there, the market came to that level and then shot back down as such. Okay, so until I cross it into this area, I have no interest in buying. Is everybody clear on that? And do we understand the reasons for this? I'm trying to eliminate and increase the probability of the type of trade that I'm looking for. So at the moment, I have no interest in becoming a buyer. That doesn't mean that it's not going to go up. I'm not saying that at all. If it does go up, that's great, but I'm not going to participate, so it's not going to affect me. Okay? All right. With that in mind, let me zoom back out. Sorry, yep, zoom in, sorry. You can understand now why I've been trying to find the selling opportunity. So far, it has not presented itself. If I go into a 4-hour chart, on a 4-hour chart, someone could argue that this might give me an inside candle to become a buyer. Okay, now remember what I said, I think I might have said it last week or in Thursday's class, I don't remember which class it was, but when I'm inside a channel, an established channel, which I do believe I've got one here because I've got 3 touches at the top, 2 at the bottom. If I'm in the channel, I will not take the trend trade unless I get to the bottom of the channel. All right, so if I was going to be a buyer based on a 4-hour chart, the only place I would consider it is if I got the setup on the bottom of the channel. Okay, and still remembering that I'm not really interested in being a buyer, but if I had to, this is the only spot that I would do it if I got the correct price action. Does everybody understand that? Because this is very, very important. When some of you send me charts to analyze, if I saw a buy, this is the only place that I would deem acceptable according to our rules. All right, so that's one option. What I'm really interested in is the following. When I shrink this chart out a little bit, I start to notice that that line has a probability of matching up right on that channel there. So this trade here is a trade that I'm super interested in. Okay, now experience and sort of gut feeling sometimes tells me that, I may not be able to get that exact setup. So this is what I propose. Okay, if I said we wanted to put a pending order and we've put it about that level there, okay, and we put a stop around about that level there, who would be happy to try and be a seller off that? Anybody? I just want to see the numbers. If you think no, just tell me no. So what about, that's 50-50 split right now. Okay. All right, it's actually a little bit more. More people are saying yes than no. Now, technically, if I was going to trade pure price action, it's a type of trade that I would not be allowed to do. All right, what about if I put that order there, but I put my stop there? Who would be willing to take the trade then? I'm just provoking you just to see how you're thinking. Okay, it's good. More people are saying no this time, and I have to agree with you. Okay, so if I was going to take this trade and I'm going to get at that level, the only stop place has to be over there. All right. Now, don't confuse stop levels with risk level in terms of dollars, because we can size the trade to take the same amount of risk. Okay, so don't be afraid of that element of the trade. Let me just measure. I just want to just check one thing. If we got in there, we're talking about a stop of about 100 pips. So if we wanted to risk $20 on the trade, we could still take that trade. Okay. All right. So just keep that in mind. I actually really do like that trade. I'm just going to put it to a vote, and if I, okay, let's say I'm thinking about risking $30 on this trade, so it's half the amount that I normally would risk, and it's going to have about 100-point stop. Let's put it to a vote. Yes or no? It's probably going to enter where that line is, and the stop's got, it's exactly as I've drawn it there. Okay, a couple of questions here that I'll answer. Someone saying, would I then not be trading against the trend? What you'll find is, if this current candle comes back up and gets me into the trade, my moving averages will still have not crossed over. I still would not be against the trend. But this type of trade is kind of trading on the principle that an old support level might become my new resistance level. So I'm going to be trading against the fact that we're pushing down off that old support level. Okay. Another question. Let me just have a look. Why not enter a bit closer to the resistance line? Okay, good question. So someone is saying, why not get in? Let me just rub out some of these things that I've just drawn on. Instead of trying to get in here, why not try getting up there? The reason is that I don't think we're going to get there. All right. So in other words, I mean, I could try it. This number is still going to be the same risk, even if I get in up there. So my risk is still going to be the same. I just don't know if we're going to have the opportunity to get into the trade at that level. Okay. There was another question. Give me 1 second. Let me scroll back through that list of questions. Someone was saying that this type of trade is I'm getting two reasons to take a trade, like the old support level becoming resistance and also the top of the channels. Yes, that is correct. All right. So we all happy with that level? Because I'm going to go ahead and place it. I may not even get triggered in the trade, guys. Don't forget that this market could just right now go down like that, and then we're not even going to be in the trade at all. So what all I'm saying is I would like to have the opportunity to get sucked into this trade at those levels. So give me 1 sec. Let me just measure it all out, and I'll tell you what I'm doing. So let's say this. Okay, the stop level I'm going to draw it there, and let's try and get in there, or even a little bit there. Let me just measure that out. So 71.23 is the entry, and let's give it 100 pips. 71.23. Right click, trading, sell limit. 71. Okay, let's size it up. 100 pips. We said $30. it's going to have to be 0.02. 20 cents per pip times 100, that's $20 US, converts to about 30. I mean, I can't go 02 and a half, so I'm just going to go 02. 71.20. Stop is 72.20. And my target is going to be 69.20. That's 2 to 1. Double check. Yes, and let's place it. Okay. Everybody clear on what just took place? You can see I am trying to become a seller at that level. In this direction, there is the stop. The stop has been placed there because it is above this support line. Okay. And that level there is 2 to 1 on the trade. Now remember, I will close out half the trade if I get to 1 to 1. All right. Let me just see if there's any questions there. Let me just scroll back 1 second. Okay, we're all clear? Done. Let's move on and let's see if we get triggered on this one. All right. Euro USD. Euro USD, we still have an open position. Now, if you look at my channel, this is a really good example of what sometimes you have to go back and modify your channel a little bit. First of all, before I amend anything that I have right here, does everybody like the channel? Does it still look like a channel? And does it look like we're still inside the channel? Yes or no? Yes? Fantastic. Okay. Now, if you have a look, the channel that I was tracking before was about there. It was that point, that point, that point, that point, and about there. We entered the market right here as a seller. That's the point where we entered the market. Okay. And then I got this candle that popped out of the channel. Okay. But look, the important part is this. It popped out of the channel, but it did not take out this high. Okay. So it wasn't like it was one of those nice bull candles as such. This candle was not a big bull candle that took out this high, because otherwise that would have indicated to me the possibility of being a buyer. It did pop out, so then what you have to do as a pattern trader is you just try and readjust your lines and see if you can make it fit back in and it still looks okay. There is no absolute rules that this line has to be on the tip of the wick, or if a wick can be outside, etc., etc. What I normally try to guide myself by is, as long as the bodies of the candles I can hold them inside the pattern, and if some wicks move out just a little bit, I am okay with that. And you can see that what I've done is I've just shifted it as such a little bit, as such, and you can see that I've been able to still on a wick, still wicks there, got wicks there, got wicks there and there. And as far, everybody's individual, okay? If you can't do this for whatever reason, if you find it difficult to do this, then pattern trading is going to be a style that you're going to have problems with, and then you have to pick a different type of trading method for yourself, okay? But I can clearly see that by myself modifying the channel a little bit, I can tell that I'm still trading inside that channel. All right. Now, I'm not going to take a new position. What it's enabled me to do is to still keep the confidence that I'm still giving my trade the original chance. That's where I entered. Here, I got close to getting stopped out there. I got close to getting stopped out twice. Okay. The trade's a little bit positive now, and what I really want to do is I want it to go down here. what I may have to amend now is my target here. I may have to put it up a little bit because, you know, I amended the shape a little bit on the trade. All right, if you don't want to amend it, that's okay. Leave it as it is. In any case, I've already got a one-to-one target, which is over there somewhere. All right, so Euro USD this week, nothing to do. We still got to sell, and the position on that is at the moment it's up 16 pips. All right, and it's been, you know, we've been as high as about plus 65, and we've been as low as minus 70 or something around there. All right, so we're still plus 16 on the trade, so we're going to leave it alone, and we're just going to be patient. Okay, who has taken this trade with me and closed out already? Can I just get a show of hands? Okay, everybody that's still in the trade, give yourself a pat on the back. Part of what we have to develop is the patience in ourselves. The method or the reasoning behind the trade still stands. Nothing has changed. Okay, so we just got to see it out and let's see what happens. All right, so Euro USD, nothing this week. We shall move on. GBP USD. Okay, remember what we said from a fundamental point of view. The GBP is one of the currencies that really has got lots of strong reasons to, instead of increase rates, start to go the other way and weaken their currency even more. All right, so from a fundamental point of view, this trend is being supported. For any of you that took a T-chaser trade on the GBP USD, you would have had an entry here. Let me just have a look again. Your entry would be there where I've just made that mark. Your stop would now be there. The good thing for you is if this candle finishes lower than that level, your stop will now come down there, and basically you're well in the money on this trade. You're up about 640 pips. Anybody on this trade, T-chaser based? Okay, just got to show of hands because I know a few of you trade this method. Alan's in on this one. Well done, Alan. Anybody else? Ooh. Okay, great. All right. We're trying to find an opportunity to sell in. Have a look at the current candle setups right now. Let me zoom in. Do I have a reason to be a seller right now? Yes or no? Great. All right. Well done. It is an engulfing candle. Okay. It's an engulfing candle. So everybody unanimously said yes. So what does that mean? Remember, the fractal is still not there. The fractal will only be there tomorrow if this current candle finishes lower than this one. Okay, so for example, if tomorrow, when we come and have a look, let's say that this candle ends up looking like that. Okay, what that will mean is we will have the fractal and you'll have an opportunity to enter the market at this level. This is the conservative method. But also, what could happen is tomorrow we could come in and this candle could be like that as a red candle down here. You'll also have the fractal, but your entry will be down there. Okay, so there's two methods that we can enter this market. We can be aggressive and enter the trade right now. And if we did enter the trade right now and it ends up going up, oops, sorry, wrong color, and it ends up going up like this, Well, then tomorrow, basically, you're going to go, oh, why did I start this trade? I don't really have an actual setup. All right, so let's put it to a vote. Who votes that we enter the trade right now as a seller? Remember, we do have an engulfing candle. The engulfing candle is there. Who wants to wait one more day? Who wants to sell straight away? Okay, it's mixed. Okay, I can smell fear. Okay. What about there's no correct answer, guys. The reason I'm making you think this is for the following. All right. What you should do is you should this is something that should be in your trading rules. So for example, when I've seen trading plans from you in the past, many of you told me that you're going to trade price action. That's great. But when this happens, you should have a specific rule. So when this happens, I'll wait for the candle to finish, or I get in on the trade straight away, or you might decide I take half of my trade right now and then I'll take the other half of the trade tomorrow. All right, so for example, if I was willing to risk, let's say $60 on the trade, 60, what I could do is I could take a $30 risk trade right now at the current level, and then tomorrow, if it was still a legitimate entry, I'll take the other $30 trade. Do you know what I mean? So, which would mean one entry would be here, and then tomorrow, this one could be stopped out, and then, well, then I don't take the second half of the trade, or tomorrow, the second level might be higher, or it might be lower, and I'll take it then. All right. Either way, if you're going to be a price action trader, you must address this issue. All right. This must be in your trading rules. All right. So let me just measure, and then I'll just tell you what I feel like doing. Give me 1 second. Oh, okay. All right. What I'm going to do is the following. I'll put in a pending order about here for the full amount. All right. So meaning I'm going to risk $60, but I'm going to start it from this level. No, actually, I'll do it for 30. And then I'll place the other half of the trade tomorrow. So I'm going to try and get in there for 30 with my stop there. And then tomorrow, if I still got a setup, I'll put in the other half of the trade. Who's happy with that? Okay, great. It's unanimous. I don't have a single person saying no. All right, let's do it. Here we go. Give me 1 second. Okay, entries 143.23. It's going to be about 100. Let's make it 143.25 and 100. Trade in, sell, stop. Let's make it 0.02. 43.25. 44.25 and 41.25. Here we go. So this is only half the trade, guys. Don't forget. Oops, what have I done? It's 44. Sorry. There you go. Are we all clear on that? So basically, I'm trading here. I've got a pending sell at that level. There's my stop. You can see it up there. And I've traded 0.02. So that's 20 cents times 100 pips is 20 US dollars. Converted to Aussie dollars, it's about $30. Okay, so basically this trade that I've put in represents a $30 risk. Tomorrow, as long as the trade is still valid, I will put in, and that I get triggered on this trade, I'll put in the other half of the trade. If what happens tomorrow, for example, let's say that this candle ends up finishing up there like that and I don't get triggered, then tomorrow morning I'll put the entire $60 trade at that level over there. Does that make sense to everybody? So in essence, I'm willing to risk $60 on this trade. I just got to get it in there. I'm going to try and get in half today, half tomorrow. But if I don't get into today and I've got a valid signal tomorrow, I'll put the entire amount in tomorrow. We all clear? Great. All right, let's move on. That's our GBP USD. Let's have a look at gold. Okay, gold last week we were looking at a 4-hour chart, and I said we're coming, and I thought we were going to break this way, but we broke the other way. So there was no real signal. Didn't take that trade, and looking at a daily chart right now. Let me have a look at something. I think I can see something. Give me 1 second. How does that look? Looks okay, guys? All right, so we've got a new channel that we can try and take advantage of. At the moment, that's not a signal there. So we haven't had a signal, but what we're going to look for is if this is pushing up, let's look for one in that area, okay? And if it comes back down, obviously we're going to look for one in this area here. So what we're specifically going to look for is this type of trade. We're going to look for that type of trade. And the other type that you can look for is this type of trade down there. So those are the three options that we have. Let's track this pattern, and this is how every trade starts off. We have to track something, start to look at it, and the more people jump on and can see it, the better it is for our pattern. All right, so gold at the moment, there's nothing right now, but we're getting close towards the edge of a channel. US yen. Okay, US yen, we spoke about the Japanese yen and negative interest rates. It created this huge candle, which is about a 310 pip candle. It moved the market significantly. It would have blown any expectations. I didn't see this happen. If I had seen this, I probably would have been a seller and I would have got stopped out of that trade, but I did not see it, so that was fortunate. So I didn't trade it. Okay. Did anybody take this trade short on the yen, US yen? The lowest difference between XUA USD and Gold Pro, there's no difference. It's just different different account types shows it differently. Okay, so it's the same thing. All right, it's good. So nobody took this one, so we all got saved from that. At the moment, this big candle kind of spoiled our chart. So give me 1 second. Is anything happening? Let's leave US yen alone. This is like a really horrible looking chart. It's got nothing, no pattern, no consistency about it. So let's just wait and let's see if it can settle down a little bit. Let's move on. Euro yen. Okay, this was one of the most frustrating channels because we got a signal. We had a nice signal over there. We took the trade. We just got stopped out here, and look at that. It's moved 500 points in our direction all the way to the other side of the channel. That's trading. That's just the way it goes. At the moment, because of the yen situation, this looks like it may just break through and continue on. However, if I do get a nice signal in here, I will consider taking the short right back down. Okay, so we're looking for if we can get a price action entry here, we may be interested in becoming a seller. All right, so keep that one in mind. That's euro yen. It's on the radar. Let's move on. Kiwi dollar. Kiwi dollar. We're currently short on Kiwi dollar. We took this two candle setup. Okay, we got it a little bit late, which gave us a better entry point. It's been zigzagging. It hasn't really gone in either direction. We've been positive, we've been negative on this trade. Right now we're almost neutral. The trade is still there. You can see our stop. There's our entry level. There's our target. We're going to stick on this one and we'll just be patient. At the moment the trade is minus 7 pips. Okay, so let's just play it out and let's just see what happens. Is it who's on this trade and who's still in it? Has anybody closed out early? Okay, so some of you are still in the trade. All right. This is part of being patient. Okay, so once this trade plays out, if it starts to come down, I can see there might be a channel forming in the other direction, but there's no point looking at that right now because we're still short Kiwi dollar. Last and final, the Euro Aussie. Okay, the Euro Aussie, we took a sell over there, so and it paid off for us, so that's very nice. This is an interesting one that I've got this candle starting to be on the outside of the channel. If I start to modify this channel, let's see what it looks like. Am I allowed to? Can I get away with it? Let's just try it out a little bit. So for me to modify this, I'm going to have to bring it about there. And if I start, I can't really go that way. I'm trying really hard. Can you see that this one, I can't really make it work. I'm starting to get a bit far away there, and I'm starting to get a bit far away there. So even though I've managed to get him back on the edge, and this one there, I now only have 3 touches, whereas before I had 4 touches. Can everybody see that? All right, so if I put it back how I had it, that's how I had it about there. The patterns start to look much nicer. So if I got a setup here to go in this direction, because I'm just outside the channel, I probably will not take this trade. All right. So having said that, let's get rid of the channel lines and let's see if we can find something else. Who thinks this area that I've marked out is a significant area or a hot spot? Yep. Okay, so pretty much everybody agrees. and history has shown that we can see that the market's rejected it. It's rejected it twice, and then when it's shot through to the other side, it's acted in the other direction. It's rejected here, and it's just continuously. So we've basically, the market is telling us that the market does not tend to stay here very often. So we can look for both types of trades, either a bounce back, okay, or a rapid movement through it. So how do we do that? Let's zoom in, let's have a look. So one option is, if these two end up staying as an inside candle with a fractal down the bottom, that would be a clear movement in that direction. Okay, so price action, inside candle back up. Alternatively, if you want it to be a seller, we would need a red candle that closes well and truly through it, and then on the next candle, you would be a seller. Is that clear for everybody? Do we understand what I'm referring to there? So if you want to be a seller on the downside, you need a clear breaking candle, a nice strong bear candle. But if you want to be a buyer, you would do it off a inside bar type setup price action candle. All right, and then we might have a setup for us. Okay, so let's look out for that. At the earliest, this one will be set tomorrow at the earliest. All right, so let's wait and see what tomorrow gives us, and we might have a trade on the Euro Aussie. Let me go back. Let's summarize what I've done. If you have any questions, please type them in right now, and I'll answer them for you. Aussie dollar. We have placed a sell. Okay, what we're trading here is we're trying to trade this strong support line, and we're trying to trade inside the channel as well. Stephen, the moving averages that I have on my chart is a 24 and a 12 exponential moving average. Okay, so this is a 24 and this one here is a 12 exponential moving averages. Right. Okay, so Aussie dollar. There's the order. I'm a seller at 71.20. I've got a 100-point stop on it and a 200-point target. Of course, I will take action at my 1-to-1 point. Okay, so that's Aussie dollar. Euro USD, we're still got a position. We're still short. The position is currently more or less break even. It's up about 10-15 pips. GBP USD, we have placed a sell for half of our risk at 143.25, stop 144.25, our target 141.25. And tomorrow we will place the second half of the trade if we have been triggered, and if we have not been triggered and it's still a legitimate trade, then we'll place the full trade, the full risk trade. Gold, we have just identified a new channel, so we're going to monitor it and see what happens. US yen, it's the ugliest looking chart at the moment of all the pairs that we look at, so we leave it alone. Euro yen, let's see what happens at the top of the channel. We might get an opportunity for an inside candle back down the channel. Kiwi dollar, we are still short from last week, and we're hoping that the market dives down towards our targets. Euro Aussie, finally to finish up, we are approaching a hotspot. We could get a price action bounce up or a bearish breaking candle, and we are sellers. Okay, so remember guys, one important thing to remember, and especially for a lot of the newer people that are in the room, and I can always see new faces, is it's not about being correct. All right, because sometimes we're wrong, but when we're wrong and we don't get the setup, we're not participating, so it doesn't really matter. So what we're trying to identify here is the highest probability type trades, and when we see them, those are the ones that we want to take action, and those are the ones that we want to participate in. Okay, any final questions before we call it a day? No? Oh, Euro Aussie, because we're not in a channel, isn't the buy against the trend. If we're buyers, Simon, let's say we get a setup right here and we become buyers, we're kind of technically still in the trend, you know, we're kind of still in the trend if we become buyers. All right. If it breaks down and breaks down here in this direction like this, what you'll find is the trend has changed, and if it breaks down like this candle here that I'm showing you, we're not interested in buying then we're sellers. All right. So that's what I'm basically saying. Make sense? Okay. All good? All right. Well, if there's no more questions, let's call it a day. I will see you all on Thursday. We'll have a look at a brand new strategy. And if you have any questions, as always, please email me to the email that you receive the invite for. Many of you might have a different email for me, but please just use that one. It just helps me significantly. And always send me a screenshot. Okay? Other than that, have a great afternoon. I'll see you all on Thursday. Bye for now.